Hello and welcome to the Stronghold Digital Mining Daily Update. Today's Wednesday, May 24th, 2023. A variety of things to go over today, so let's get right into it. First and foremost, our stock managed to close above $1 a share yet again, which is critical. We need to do this for 10 cumulatively, right? For 10 consecutive trading days. We're well on our way to achieving that goal. It's going to be really critical that we achieve that goal so that we kind of put this behind us for now. Okay, that's the first thing. So that's good news. The second thing, a question came up. Hey, how does the Zyner.com, Stronghold Digital Mining shareholder dashboard, hey, how are you computing the market cap? Because it kind of seems a bit off compared to, what you see right on maybe popular finance apps, Google Finance, Yahoo Finance, whatever the case may be. Great question. Traditionally, I've been going into the 10 Qs and adding up how many Class A shares, how many Class V for victory shares, put those two numbers together, and then multiply it autonomously right through software with the stock price to derive the market cap. What I started doing probably about maybe 2 quarters ago or so was to look at the investor presentation. For example, let's pull up the first slide. I think it's slide number 2. So what you'll see basically is that there's that rectangle there, and it shows what the fully diluted market cap, right, for Stronghold Digital Mining happened to have been. This was back during our May investor presentation. And you'll notice that there's a footnote. And if you look all the way at the bottom, it says based upon, and I'm sort of paraphrasing because I'm not looking at that slide directly as I'm saying this, but it's basically based upon a fully diluted number of shares outstanding of about 145 million using the treasury method. Okay, back to me. So what I'm attempting to do is really just harmonize the information that's on the dashboard with what is included in our slide presentation when we have these investor presentations, okay? So I don't believe that as of right this moment, we actually have, pre-reverse split adjusted 145 million shares floating around out there. But when you include warrants and a lot of different things, basically fully diluted about 145 million as of that investor presentation. So what I did after the reverse stock split was simply divide 145 million by 10. That produced 14.5 million. So 14.5 million is being multiplied by whatever the closing, or not closing, but whatever the current stock price happens to be, because this is something that updates all the time. And that's what's producing the market cap that you see on the Zyner.com, Stronghold Digital Mining shareholder dashboard. So I'm attempting, in a nutshell, to be congruent with the information in our investor presentation. Okay, moving on. There's a question as to the at-the-market offering that was announced yesterday. Okay, now this was kind of buried beneath a variety of other regulatory things. The one item that is of note is the at-the-market offering. What that basically means is that Stronghold Digital Mining is going to work with H.C. Wainwright to sell up to $15 million worth of Class A common shares at whatever the stock price happens to be. I think they came up with a $15 million figure based on what the stock price closed on. Don't quote me on this, but I think it would have been maybe on May 19th. And so there's a certain number of shares. I think it might be like 1.8 million shares. Again, don't quote me on this. It's all in the regulatory filing. But the end result is to raise money. So, hey, wait a minute. I thought, right, and this is a question that I'm positive, right, might be going through some individuals' minds. I was like, hey, wait a minute, but I thought that we took care of all our debt, that, the worst was behind us, like what's going on? Well, yeah, the worst in that regard is behind us. We no longer have this tsunami of debt that's, essentially bearing down on us to the point where we really risk, a catastrophe as a result of the debt. But there are other challenges, right? Business is one of those remarkable endeavors that so few people, I think, really appreciate just how challenging this stuff can sometimes be, because just when you solve one problem, it always seems as if though another challenge, another problem, potentially arises. So, case in point, let's remember what I alluded to yesterday during our update. I said, I've been doing a lot of math, and boy, we really got to work on that revenue. And I said, right, more or less words to the effect of, it's not to be negative, it's just to be real, right? We need to be super lucid and aware of what's going on with our business. So let's take a look at a couple of things here. Let's bring up the next slide here. Okay, so this is an Excel spreadsheet that I've been working on. Let's actually zoom in a little bit more to that squared area there that reflects 2022 Q4 and then 2023 Q1, right, which is the quarter that just ended not that long ago. So you'll notice this kind of tries to break down what really amounts to like core operational revenue and then core operational expenses. So when you look at Q4 2022, you see a situation where when you do all the math, okay, we brought in north of $28 million in core operational revenue. By contrast, we only had core operational expenses of about $23.5 million. The 4.7 million that you see right below the orange highlighted area there, that just simply represents the difference between core operational revenue and core operational expenses. So we had a gain of 4.7 million. The 5.182, that's the adjusted EBITDA. That takes into consideration a variety of other metrics. But again, this is useful for comparison. But let's keep it simple, right? In Q4 2022, revenue exceeded expenses, thereby we had a gain, right? That's a good thing. Q1 2023, what changed? Hey, I'm noticing our expenses really, all in all, were pretty darn the same, right? They're pretty darn the same as compared with Q4 2022, which, by the way, Q4 2022, our fuel expense was dramatically lower. Without getting into all of the technical accounting reasons for that, in very general terms, there's various computations that typically take place at the very end of the year in the fourth quarter that have that type of effect on our cost of fuel. So that's why that number is particularly low. I anticipate it'll be similarly low when we get to Q4 2023. But okay, so just let's zoom back out again. So hey, what really changed here? Because gosh, our expenses actually were quite lower when it came to O&M, operations and maintenance, a lot lower when it came to general administrative. Heck, even our fuel expenses, if you look at 7.4 million, that's the lowest it's been. Really, I mean, if you look at all the quarters of 2022, 7.4 million, that's phenomenal, incredible, okay? So we had our expenses under control in Q1 2023. What really changed? Well, let's look at the revenue. Revenue really saw a setback. Why? Grid sales were incredibly soft, and we simply did not have, right, the Bitcoin economics to really generate a lot of profitable revenue as a result of the fact that, right, we had depleted our mining fleet quite wisely in an effort to extinguish a bunch of debt. And at the same time, we ran into a situation where essentially, hey, Bitcoin economics, especially at the very beginning of Q1 2023, were just lousy. So when you look at this, okay, let's come back over to me now. When you look at numbers like that, hey, it's understandable. You're going to have a loss. That's not a good thing. Now, let's look at something else. Let's bring up the next slide. Okay, so as of May 8th, 2023, Stronghold's liquidity was approximately $8 million, comprising $7.4 million in cash plus 22 Bitcoin. Now, okay, back to me. Now, bear in mind, as part of our second revision to the Whitehawk finance deal, we need to have basically $2.5 million, if I recall correctly, in cash at all times. So we need to take that into consideration when we look at some of these numbers, right? So 8 million in liquidity, or roughly 7.4 million in cash. You got to then think, well, you got to subtract about 2.5 million of that, because we have to kind of keep that on hand as part of the second revision to the Whitehawk deal. So it does put a constraint on our ability to, be, I think, very proactive with, be it acquiring miners, be it finalizing a deal to place this extra exahash of end-to-end data center capability that we have at our disposal. Especially given the fact that, again, Bitcoin has still, it's come back to life, and there are some really great days out there, but grid sales, so far nowhere to really be found, right? It's still a very soft grid environment, and we're kind of now going into a situation with, a lot of macroeconomic factors that might be positive tailwinds for Bitcoin. But in the short term, again, we might find ourselves again a little bit starved for revenue. So why does that matter? Well, it matters because ultimately, if we don't have sufficient revenue, it really kind of puts us in a bit of a pinch as it relates to our core operational expenses, right? Those expenses just don't go away. So I think it's actually quite advantageous and it actually puts my mind at ease a bit that we're doing this simply to give ourselves just a little bit of extra elbow room to get through this next period of time. I've said this before, we don't control grid prices. We have no control over, Bitcoin prices, nor do we have control over the Bitcoin network hash rate. Those are, Bitcoin, right? The price of Bitcoin and essentially grid prices. Those are our two main revenue inputs. We have mastered really our expenses. We're really in good shape there. But hey, we don't have control over the revenue piece. And when things are soft, as they have been and continue to be, we need to give ourselves a little bit of flexibility. This is something I'm happy to get into more detail with regard to. I want to be mindful of the time. With these updates, we try to keep it kind of short, okay? Right now, the key thing is that, look, we're not going any further into debt. We're doing the things we need to do to make sure we have the operational flexibility to be proactive, okay? At the end of the day, right, this business, our business, Stronghold Digital Mining, we are heavily dependent on our revenue inputs, either grid sales or Bitcoin economics, okay? So let's keep it real. Those things have to work. One of those two things have to work for us, right? If neither of those things work for us, that's problematic. Not just for us, but really for the entire Bitcoin mining ecosystem, right? Because, there are a lot of other publicly traded Bitcoin miners out there. We thankfully have more optionality. It's not just a one-way bet on Bitcoin. But hey, if grid prices are soft, then yes, then we are a bit more reliant, as is everyone else, on Bitcoin economics. So hopefully that provides a little bit of context and color as to why we're likely doing this. It makes sense to me, and I'm actually really grateful that we're doing this to give us that optionality. Let's remain positive. Let's be great. Let's get into tomorrow. Hey, let's remember, markets might get really unstable as this whole U.S. fiscal drama plays out as it relates to the debt ceiling and things like that, one day at a time, okay? Let's stay positive. Let's be great, and I'll see you tomorrow, and we'll talk more then.